planning for the future is difficult. For business owners, the self-employed, and high net worth individuals, it can be particularly tough to choose the right way to utilize resources. Let's take a look at two entrepreneurs, each in roughly the same position, who elected to take different approaches to meeting their future income, business, and estate planning needs. Steve and Susan, both in their mid-40s, had each created their own thriving businesses. With reliable cash flows, strong earnings, and a bright future for their firms, they each found themselves with a similar set of concerns, a host of financial planning needs, and a range of possible means with which to fund those requirements. The broad landscape of options was overwhelming for these two entrepreneurs. Working with their respective financial advisors, Steve and Susan each charted a course they intended to best meet their needs. The financial future, however, looked to be brighter for Susan than Steve. Let's see why. Steve elected to pursue what many would consider a traditional investing approach. By cobbling together investments from a selection of these traditional vehicles, Steve anticipated that he would achieve his future income expectations. Susan, on the other hand, elected to meet her stated goals by adding a leveraged planning solution to the traditional investment tools she'd already put in place. The leveraged planning solution is a life insurance-based approach. It's designed to provide businesses and individuals with the life insurance protection they need and a range of other financial planning options. Leveraged planning solutions offer the ability to put borrowed funds to work, thereby creating substantial potential for future income. Additionally, leveraged planning solutions can provide other potential benefits that traditional financial planning options can't. Let's see a hypothetical comparison of the costs and benefits if they took the same funds and employed them in differing ways. Both Steve and Susan elected to allocate $980,000 over 10 years to fund their financial planning strategies. The red line in this chart illustrates Steve's after-tax cash outlay over 10 years into traditional planning vehicles. The yellow line illustrates the annualized after-tax interest costs that Susan would incur in the same 10-year period. So, while they allocate the same amount of funds, what do these costs buy? Let's take a look. Starting in year 20, both Steve and Susan began taking distributions of $363,000 each. We see that Steve's pre-tax withdrawals deplete the total available pool of funds year after year until it is completely exhausted in approximately 10 years. Susan's tax-free policy loan withdrawals provide her steady income to her life expectancy and beyond. By funding the life insurance policy, satisfying the loan from policy cash value growth, and withdrawing an annual sum, Susan is left with tax-free income and a tax-free death benefit to her heirs. Susan's leveraged planning solution was implemented easily and had several features that made it appealing. She could borrow the funds through either an ILET or her business. It was self-completing, thus the loan principal was paid out of the growth in the program. In many cases, and in Susan's, a personal guarantee was not required. She would be able to provide a death benefit to her heirs. Susan's success was substantially greater than Steve's by virtue of adding a leveraged planning solution to her financial strategy. For business owners, entrepreneurs, and other high net worth individuals, leveraged planning solutions present an opportunity to put the power of borrowed funds to work for personal or business needs. Traditional life insurance premium financing, income creation, retirement planning, buy-sell funding, group life insurance policy funding, key man policy implementation, and many more financial needs can be met using a leverage planning-based funding solution. For more information, please contact your GFD Financial Services Manager today.